Welcome back to Gold Tales. Today we provide you a gold market update for October 2024. And before we dive in, please remember that this video is for educational purposes only, and not financial advice. Always do your due diligence before making any investment decision. Today, we're exploring the latest developments in the gold market, where prices are hitting record highs amid geopolitical tensions and economic uncertainty. Let's break down what's driving these trends and what they might mean for your investments. As of today, December gold futures are trading at approximately $2,730 per ounce, marking an impressive 30% increase this year. This surge can be attributed to several factors, including ongoing geopolitical instability and the recent easing cycle initiated by the Federal Reserve. Analysts suggest that as long as these dynamics persist, gold could remain a strong performer, potentially drawing more retail and institutional investors looking for stability in their portfolios. Recent events in the Middle East, particularly the escalating conflict involving Israel and Hamas, have heightened fears among investors. Following the killing of Hamas leader Yahya Sinwar, traders are seeking safety in gold. Analysts from ING noted that safe haven demand has been a significant factor in gold's record-breaking rally this year. The heightened risk of military escalation not only affects regional stability, but also has far-reaching implications for global markets, making gold a go-to asset for those looking to hedge against uncertainty. The upcoming U.S. presidential election adds another layer of uncertainty. Analysts predict that, regardless of whether Donald Trump or Kamala Harris wins, the political climate will likely continue to support gold prices, due to the potential for volatility. The political climate will likely continue to support gold prices, due to the potential for volatility. As both candidates present differing policies, the market remains on edge about how their administrations might approach fiscal policy. And this anticipation often leads investors to gold as a safer alternative during election season. Central banks are also increasing their exposure to gold. According to Bank of America, gold now constitutes 10% of central bank reserves, up from just 3% a decade ago. This trend reflects a growing strategy among institutions to diversify their currency reserves and protect against inflation and debt debasement. The persistent demand from central banks not only supports gold prices, but also indicates a broader recognition of gold's value as a long-term asset in times of economic uncertainty. Market experts believe that as U.S. debt continues to rise, projected to hit $35 trillion, and fiscal pressures mount, gold could emerge as one of the last safe haven assets standing. Recent comments from Fed Chair Jerome Powell emphasize the need for careful monetary policy, with expectations of continued low interest rates to foster economic growth. The lack of a clear plan to address the rising national debt may lead to further devaluation of the dollar, driving even more investors towards gold as a hedge against potential economic instability. Notably, the Federal Reserve's recent 50 basis point rate cut has reinvigorated interest in gold. Many Western investors are stepping back into the market, eager to take advantage of favorable conditions. This dynamic is expected to drive further demand, as inflation concerns remain prevalent in the economic landscape. With the Fed's ongoing discussions about monetary policy, any indication of further easing could result in even higher gold prices, making it an appealing option for both seasoned and new investors alike. And now, a quick update on the silver market. Silver is also gaining attention on the world stage, with December silver futures trading around $33.41, which is up 5% for the week ending October 18th. Analysts also suggest that silver's rally is just beginning, and some predict it could outperform gold as the gold-silver ratio continues to drop in the weeks ahead. As industrial demand for silver increases for products such as solar panels and other electronic devices, alongside its safe haven qualities, investors may find that silver offers unique opportunities for growth in the current market environment. Technical analysis shows that gold has successfully broken through $2,700, a key technical and psychological level. Analysts are eyeing potential targets of $2,727 and $2,743, key resistance levels, in the near term, but they also warn of a possible pullback of 15 to 20% before any further upward momentum. It's crucial for investors to stay alert during this volatile period. Monitoring these technical levels can provide valuable insights into potential entry and exit points, helping investors make informed decisions in a fluctuating market. In summary, the gold market is reacting to geopolitical tensions and economic data, with significant shifts in institutional buying behavior. As always, it's essential to stay informed about these developments. The ongoing uncertainties in both the political and economic landscapes are likely to keep gold prices elevated, making it an important asset to consider for diversification in your portfolio. Thank you for joining us today for this market update. If you found this update helpful and informative, please like and subscribe, as well as pinging the notification bell for the latest insights on the gold market. Stay safe and happy investing. And, until next time, stay golden.